Hello everyone, I'm Rob Smith of the In the Black VTF here at T3Live.com with today's market wrap-up for the day and the week. And a little shellacking here in the old market. Here's what I've been talking about the last few days, that series of lower highs in the SPY 60. The number came out, and when I did the morning call, things were pretty quiet. They were still around in here, but I talked about the importance of not, if we can't break through that we might get something of a waterfall, and here it is. So what happened in the morning here is we gapped down and then tried to rally back. We had some real wild action right out the chute due to the jobless claims number and how that's going to affect interest rates and whatnot. So obviously there's going to be the financials. And if you look at the FAS, right out the chute, opens about flat, ticks down, rallied hard, and then came all the way back down towards the lows. You can see some of those things really getting pummeled here, like JP Morgan. Here, just a full about face since the opening, big shooting star and down there. But if you took a look at some of the other stuff, the KRE, the regional banks, you can see how that came up and still held with completely within the 60-minute range of the day. And so there's a big difference between stuff like JP Morgan and PNC, which they lost a little luster on the with the rest of the market, but still you can see how strong that was right out the chute. U.S. Bancorp a little bit weaker. You can see BK a little bit weaker there, and you saw some of those insurers at MetLife go up there. Pru really start gunning up there, so that really set a large amount of the tone. But when we look at what would cause more selling than we've seen recently, so if you look at the SPY, it's not the end of the world. First of all, we're still an inside month. We just didn't go to new highs and drop back in. And, in this environment, a lot of people haven't seen any real selling in a long amount of time, but even coming down into here would still be in the greater scheme of the uptrend, and albeit quite lower from here. But if we took a look at the daily, here you can see we just come up in here, had that range, tried to hammer, couldn't get back through, and then drop in. I was looking at this line here this morning, but then we got through that a little bit. No big deal there, but the question is that the mechanics of what would cause something to sell off like this, not just the news, but the technical mechanics of what the setups are looking like. And so before we even started today, one of the problems was we're, first of all, bordering on shooting star on the SPY itself, but when you break it down into some of the stocks, like Procter & Gamble, we had on the weekly basis, you can see this down, sideways, inside, weak, and down for Procter & Gamble. And so we had 4 Dow stocks that were already inside, weak, and down. Walmart, Cat Tractor were already inside, weak, and down when today started. UTAX here. And so we knew that we had some bias to the downside if we started to drop in the Dow Jones. We also knew that last night we had inside days in the energies. Oil itself, XLE, OIH, XOP. And so I'm looking at these charts, it's like, oh, they didn't get really cremated. But the important part is that it doesn't take that much when everything's down even slightly or a good amount. And so we even had there on the weeklies, to compound those daily breaks in the energies, you had inside weak and down for Amerada Hess. You had it down for EOG just slightly, APC. So these things were all inside weak and down as it was. Then the inside days did all that re-break. If you go to the trannies, you already had UPS was already slightly inside weak and down. And for today, to start off, not only were the energies inside days, but also the transports. And so the transports closes an inside day. So these equilibriums are important because they're neither an exhaustion of this move or rest before more selling. So when we see that in something that can be considered counter, like energy and the transports, not such a good sign. And then when you look at the major daily breaks, there was a ton of them, and they were across the board in different in different sectors. Here you can see Merck and the Dow is inside day and down, which also took and triggered a monthly break below last month's lows. You also had Netflix here taking an inside day to the downside. Triple M in the Dow as well, inside day and down. Walt Disney World, inside day and down. American Express, inside day to the downside. Pepsi. Here you had SanDisk in the tech. You had Starbucks in retail. You had CRM here a little bit in tech and Visa there in financials. So you had all that working against you. And oftentimes I'll talk about Dow theory. It's a lot more intricate when you go through the S&P and all the major sectors. But if you go back to the old school and look for a confirmation of the three, the utilities, transports, and the industrial average, oftentimes what we've seen over the last few years, it's okay when the utilities sell off because it's a sector rotation going into more risk. But if you start to see everything tanking at the same time, that's a bad sign. And so that XLU really just getting smoked here, and that's okay if we're taking this money out to rotate into risk on, but that's not what we're seeing. So that added fuel to the fire. If you look at some of the REITs, VNQ here, another problem here was monthly breaks. VNQ inside month and to the downside, and you have stuff like VTR, and there's a whole bunch of them, EQR. All of these things break into the KIM, all break into the downside, so that wasn't helping either. Another thing I talked about this morning was gold. And if you look at gold, here, gold broke the inside month. It gapped down here, and you can see this. It was just channeling lower, then gap and go here. And if you take a look at the inside 60 here, it went down and gap, and so when it reached this equilibrium, this inside 60-minute bar, either it's going to exhaust it, and we can try and come back up, but that's not what happened. Down, sideways, measured move off of the inside bar, which also broke the monthly at the same time. And as I said this morning, the GDX is already inside month and down, so that wasn't helping that at all. And so there was a lot of good trades in the GDX. On the short side, you had GG and GOLD are both inside month and down there as well. Or if you looked at, say, Dust, here you can see how clean this was, inside month and up for the Dust, and you're just walking it up. There's an inside 15 to get in there and just ride the train to the upside. So we had a lot of selling in there too. If we were taking a look at some of the gaps from this morning, you remember that YY, and the question is it a gap and sit, a gap and go, a gap and reverse? And for a good portion of the day, it was gap and sit. And it goes up, it goes inside 60, goes inside 60 again, goes inside 60 again. Now it's time for the real move. Are we going to the highs? Well, in this environment, no. If the market was doing better, maybe it comes up and does that. But once it broke that inside 60, back into the gap with you. So there was another problem there. But when you have an environment like this, obviously you want to be leaning toward the short side. But there were some glimmers of hope there, like I said, with some of those financials. eBay was interesting today here, too. eBay held in pretty tough, and it wasn't for the market falling apart. It might have done better because it's coming out of this massive, massive consolidation here. You can see this here and testing the new all-time highs is eBay. So instead of trying to bottom pick things, oftentimes you just want to look at things that are going up. AICI here. Another strong stock there that wasn't really affected. You had TWX to a certain extent. It was a little bit slim pickings there, but let's see, KYTH. Here, another one we were watching and taking part of this KYTH. Anything that's doing this in this environment certainly warrants looking at long side setups. If we go to blue, here, blue went to new highs here, and that's some of that IBB stuff. And IBB, albeit red here slightly on the day, for the most part of the day, it did nothing. If you look at the 60, it comes in, and we're looking to see if it was going to go down, sideways, measured moving out of this. That never materialized, and it just kind of sat there. So this is going to be real interesting, is if they really want to hit them, IBB certainly would be ripe for the picking up here. Or if we start to rally back, anybody short this stuff that didn't take it today could be pressured again. So to start off next week, there's plenty of inside days over there. ISIS is one. You've got Clovis here, inside day near the all-time, or not the all-time highs, near the recent highs. VRTX here, another inside day near the highs. BMRN. So all this stuff is going to be real interesting come Monday morning to see if, oh my God, what have I done, or if they want to keep buying them. Here, MDVN also on the highs. Another thing we can look for is, yes, did we get a bunch of breaks to the downside today? Yes, but to start off next week, we want to see if we're going to stabilize, first of all, who would form inside bars that were too strong to go to any more new lows next week, or foremost, who stayed inside week this week, who didn't go to the lows this week. Amazon's one of them. So Amazon, if they're going to try and help the break next week, you can see that inside week here. You also had CRM inside week there, albeit closing near the lows, and Akamai here just an inside week. So these things were too strong to take out last week's lows during the sell-off. You got Home Depot up there, lows. And I know some of these things are looking ripe for the picking, but that's what it's going to. That's going to be the mechanics. If we're going to go down further, some of this stuff is going to break as well. You got American Express also as an inside week. You've got in the trannies, you got United Airlines. You've got Southwest Airlines, both staying inside weeks there to keep an eye of. You got Halliburton in the energies here, and energy's been a little quiet, but if they're going to turn around or redump, that's what it's going to look like. You've got LVS here as an inside week, and the problem there is that I look for reversals off of rejected inside bars here, and you can see this shooting star here, rejection, where it opens and closes back after trying to take that. So that would be a real problem on the monthly if we take that out, and so we're going to be keeping a real close eye on this inside week in LVS. MGM is also an inside week there to keep an eye on. We also have in the retail Dollar Tree here, inside week near the highs. You got TJ Maxx inside week near the highs too, so we'll keep an eye on that. As bleak as things look, if we look at the monthly charts, we do have some of those financials holding tougher on the monthly, albeit they gave some back today, or at least some of them did. But if you look at Citicorp, that's still trying to take an inside month to the upside. So is Regions Financial, so is Schwab here, still trying to go toward the highs. AIG takes out the inside month very briefly, and Zion Bancorp there. So not the end of the world if we look at that. So certainly a good description here today of the anatomy of a break and what causes it technically when you're looking at all these equilibriums breaking. In other news, we had Apple is going to go into the Dow Jones Industrial Average, see if that can give us a boost and get us up to 20,000 or whatever. We're taking out Ma Bell, AT&T. Well, what can you say? Ma Bell had a good run, but oh well. Apple had to take over, King Apple. So that's going to do it for this week. I'm going to be watching that, certainly watching the IBB if that can still maintain outperformance, and where allocation starts to go to start off next week if they want to keep hitting them or maybe stabilize like we often have in the last 5 years. All right, that's going to do it for today. Everybody have a great weekend. I'm Rob Smith from the In the Black VTF here at T3 Live. Hope you all have a wonderful weekend, and that's it for the Market Wrap.